Are you aware that less than 5% of people in the US boast a pristine credit score of 800 or higher? Today I'm going to show you how to join this exclusive club without spending a single penny. Welcome to our guide on mastering the art of a perfect credit score, the key to unlocking the lowest interest rates and saving thousands over your financial lifetime. We'll dive into everything you need to know to hit that how to get a perfect credit score for $0. Let's get started on this journey to financial excellence. And if you're looking to elevate your financial game, don't forget to hit that like button. Subscribe for more insights and share this video with friends who could benefit from a perfect credit score. Understanding credit scores. Basics of credit scores. Credit scores are like a report card for your finances. They show banks and lenders how good you are at borrowing money and paying it back. A high score means you're a safe bet. It's like getting an A+ in money management. This score matters because it affects your ability to get loans, credit cards, and even good deals on insurance. In simple terms, the better your score, the easier and cheaper it is to borrow money. How scores are calculated. Your credit score is made up of a few key parts, each playing a different role in determining how high or low your score is. Payment history, 35%. This is about whether you pay your bills on time. Just like handing in homework by the deadline, paying your bills when they're due shows you're reliable. Missed payments can really hurt your score. Credit utilization, 30%. Imagine you have a limit on how much you can spend on your credit card. If you use too much of this limit, it looks like you're relying too much on credit. Lenders prefer you to use less than 30% of your available credit. It's like not using all the space in your backpack. It shows you can manage what you have. Length of credit history, 15%. The longer you've had credit, the better. It's like showing you've been a good student for many years, not just a few weeks. Credit mix, 10%. This means having different types of credit, like a credit card, car loan, or mortgage. It's good to show you can handle different kinds of borrowing, just like being good at different subjects in school. New credit inquiries, 10%. Every time you apply for new credit, it can slightly lower your score. It's like asking for too many favors at once. Doing it too often can make people wary. Strategies to achieve a perfect score. On-time payments. Making sure you never miss a payment is like turning in every assignment on time in school. It's crucial because your payment history is a big chunk of your credit score. Even one missed payment can make your score drop. Think of it as keeping a streak going. The longer you keep up with your payments, the better it looks to lenders. Credit utilization. This is all about how much of your available credit you're using. Imagine you have a $100 limit on a credit card and you use $90 of it. That's high utilization, and it doesn't look good. Try to keep your spending low, under 30% of your total limit, to show you're not depending too heavily on credit. It's like not filling your plate too full at a buffet to show you have self-control. Length of credit history. The longer you've had credit, the better. It shows lenders you have a long history of being responsible with money. It's like a long track record of being a good player on a team. You can keep this score healthy by not closing old accounts even if you don't use them much anymore. This keeps your credit history looking mature and well-established. Credit mix. Having a mix of different types of credit, like a car loan, credit card, and mortgage, shows you can handle various types of financial responsibilities. It's like being good at multiple sports or subjects. This variety can boost your score because it demonstrates your versatility in managing credit. New credit. Every time you apply for a new credit card or loan, it can slightly hurt your score at first. It's because lenders might think you're in desperate need of money. It's like asking too many people for help in a short period. It might make them wonder why you need so much assistance. So be careful about applying for new credit too often and only do so when it's truly necessary. Actionable tips for improvement. Checking your credit score and report. You can look at your credit score and report without paying anything. Websites like Credit Karma offer this for free. Make sure everything is correct on your report. Sometimes mistakes happen, like being marked late on a payment you made on time. If you find errors, you can ask the credit bureau to fix them, which can help your score go up. Becoming an authorized user. If a family member trusts you, they can add you to their credit card as an authorized user. You get to borrow their good credit habits. It's like getting extra points in a game because your team is doing well. This can help your score, especially if you're new to credit or looking to improve it. Negotiating with creditors. If you missed some payments or can't pay your full balance, talk to your creditors. It's like asking a teacher for extra help when you're falling behind. Many times they can offer a plan that fits your budget better. This can prevent your score from dropping further. Credit building products. Look into products designed to help build your credit, such as secured credit cards or credit builder loans. These tools work like training wheels for credit use. With a secured card, you put down a deposit that usually becomes your credit limit. Credit builder loans hold the amount you borrow in an account until you've paid off the loan. Common mistakes to avoid. Closing old accounts. Think twice before you close an old credit card, even if you don't use it much anymore. Your oldest accounts help show a long credit history, which is good for your score. It's like keeping old trophies on display. They show your long history of success. Closing these accounts can make your credit history seem shorter, which might lower your score. Instead, keep them open. Maybe use them for small purchases once in a while to keep the account active without costing you much. Paying for credit repair services. Be careful about companies that say they can fix your credit for a fee. Many times what they offer, you can actually do yourself for free. This includes disputing mistakes on your credit report or talking to creditors about your debts. It's like paying someone to clean your room when you're capable of doing it yourself with a little effort. Plus, some of these services might not be honest, and you could end up spending money without seeing your score go up. Always try to handle credit issues on your own first, using free resources and advice. We've covered a lot today, from the basics of credit scores to actionable tips for boosting your score, and even what mistakes you should avoid. If you found this guide helpful, don't forget to hit that like button. It really supports the channel. Subscribe for more insightful content to help you navigate your financial journey. Sharing this video could help someone out there looking to improve their financial health, so spread the word. And if you have any questions or your own tips to share, drop a comment below. We love hearing from you and learning together. Thanks for watching, and let's keep building those perfect scores.